Hello.
Hello, everybody.
Hello, Mike. Can you hear me?
I can. How are you?
Excellent.
Good to see you again. Boy, it's been a
Doing
while.
well. Yeah, it has been a while.
Yeah.
Doing well.
I
I
was
just got, go ahead.
I was just going to say I think I was on this link and then another one came on my email. I said, "Geez, am I in the right place?" So I got off and got back on. So,
Okay, good. Yeah, I had a mistake in my automation where I sent each person a unique URL for the Zoom call, and then
uh-huh.
all the recipients have the same one because it's a series. And
Yeah.
so I have to go through and just make sure I correct that.
Hey, I may have sent you the wrong PowerPoint that I'm going to do.
Okay. Okay.
So if you can give me access to share my screen, I'll just
Oh
share
yeah.
the one I'm going to do.
Yeah, we always have the presenter share their screen. That's fine.
I may not have sent you the wrong one, just kind of changed my mind since I sent it.
Yeah, no problem. No problem. Um, I just got back from my 21st wedding anniversary
Oh, congratulations.
getaway. So I am back in the office as of today
Where,
and
where'd
looking
you
forward to
go?
it. We've been doing things that are kind of lower key. My parents live in the Sonoma Napa Valley in California.
Uh-huh.
And so we go visit them, we drop the kids off with them, and then we head out and find a little bed and breakfast somewhere kind of in the wine country. And in this case, we were down by the Russian River, if you're familiar with that, but it's a great river, and we spent some time kayaking and, just hanging out.
Nice. Good for you guys.
We'll see how our attendance is today. Something happened at Intel, and our attendance suddenly dropped drastically. And
What
so
uh what do you think caused that?
I think Intel's just going through a hard time. There's been a lot of employee turnover. And
Really?
since this club is mainly Intel employees, I think that's really had a strong effect on our club. So we're going to be in a mode where we're going to be regrowing it, I think, for a lot of the year, and starting to advertise, in other areas. Um, we've got, 5 years worth of speaker meetings. It's great content
Yeah.
almost every Friday. All right. It's noon though, so we should start to see people joining.
Okay. What so you said Intel is doing layoffs or
Oh yeah. Yeah. Intel's been going through perpetual layoffs for a number of years now, actually. And they just announced another large layoff round. So I've got a whole bunch of friends that are affected by it.
oh,
Both on both sides, several friends that are managers, and they're coming in, and I've got a couple of good friends that are managers, and we talk, and they're stressed out about how are they going to figure out who to let go. And then, of course, everybody else is stressed about being let go.
yeah.
Hello, Chris. Hello, Brad.
Hello.
Hello, Grace. Eric, Mai, and EC. I know EC is a regular here, although I don't think I actually know his name. Okay, we're gonna wait a few more minutes, see if we can get some people in. I think last week we had, I forget what we had, 30 or 40. So we'll give it a little more time.
It's not a bad turnout.
And again, at the beginning of the year, we had 70 to 100. So it's cut our attendance in half, whatever is
Oh,
going
wow.
on over there. Now, are you still you're still doing the mentorship programs?
I am. Yeah, I'm
Is
still.
your story still the same one that you told us? I don't know if I want to bring it up. If it's not the story you're going to tell, but is it still the same story, or do you have a? I mean, are you
I was going to really just deliver some content and a little
okay?
bit on how we're using AI today, and uh,
Okay, okay.
say turning data, turning data into decisions is the title of the
Okay.
presentation. So
Sounds good. Sounds good. I know last time.
yeah,
Give me a moment here and I'll look up the date for last time. I actually think that your video, for whatever reason, is not one of the videos we have posted. I know at some point we had a couple of our videos go missing in the transition outside of Intel. But let's see.
Yeah, well, the story's still the same as you asked.
Okay. Oh yeah, boy, September 24th, 2021 was the last time you came in and spoke to the group.
Wow.
It's been a moment.
Yeah, almost 4 years.
Yeah.
I can't believe that we're at the middle of July already,
Yeah.
Time just goes fast.
Hello, Anita, Bao Hong,
Hi,
Shiva. Hey,
how are you?
good.
Good.
All right. While we're waiting for more people to come in here, does anybody have requests on topics that they would like to bring in? I know that I am actually pretty solidly booked, although next week's speaker did actually cancel on me. So I have the opportunity to reach out to someone with a particular topic. I have a few people on my list of people to reach out to, but if somebody has a particular topic they want to hear about, and I have a person like that on my list, let me know. What would you like to hear about next week? Any
H-
topics?
How
Go
about
ahead.
starting up a group home or assisted living or that kind of topic? I don't remember that coming in.
Okay, we can do that. Um, let's see. Yeah, yeah. And I think we've had that topic 2 or 3 times over the last 6 years. So there's some in there, but it's a good topic because whenever you put together a business with real estate, that charges your cash flow, you've got, more than one way. It's not just dependent on rent for making your numbers.
Yeah, and I think we talk a lot about the business side, but I don't know if I understand really well about the landlord side, about letting somebody come into my place and run their business. Those are the questions that I want answered because it's, a lot of people always offer, hey, because sometimes you get tired of being a landlord and renting like short term, midterm, or long term. But when people come to you and say, hey, I want to lock up your place for 3 years, I'd want to know like what are the things I need to ask about. So
Right. Okay. Okay. Hello, Bob, Vasu. All right. Boy, it looks like a small group. We're back to kind of how this group started out 7 years ago. So I guess we'll get started here, Mike, unless you're if you're comfortable with such a small group.
Yeah, I'm fine, actually. Have you been running this group the whole time?
Almost every Friday for 7 years, yeah.
Wow, good for you. I was just on my Bible study this morning, and I've been hosting that for a little over 5, so I know what the commitment is like.
Oh
So
yeah, congratulations. Congratulations. It is a commitment.
yeah.
All right. Well, we'll let you kick it off. Why don't you share your screen and I'll let you introduce yourself. I haven't spoken to you in the last 4 years, so I'm definitely interested in hearing what the updates are.
Okay. All right, great. Well, let me get my
Oh, let me give the standard disclaimers here. This is the Alternative Investing Club. Welcome, everybody. Today is July 18th, 2025, and we're speaking to Mike. He's going to talk to us about smart asset management, turning data into decisions. And just to give a disclaimer here, this forum, we don't give recommendations. We're not a financial advisor. We're not a tax advisor. We're not a legal advisor. We are a forum of investors for investors listening to guest speakers. And so we're hoping to educate everybody as they're coming here, but still, your decisions are your own and learn as much as you can and be responsible.
Well, thank you, Daniel. I appreciate it. I appreciate you having me back again. So I must not have done too bad of a job 4 years ago. So
Yeah.
I'm excited about being here. Hi, everybody. I hope you had a great week and are having a good day and are optimistic about an exciting weekend for yourself. So, but today I'm going to talk about turning data into decisions, defending the data. I think a lot of times we can come up with great ideas, but how do we defend that data, or how do we defend those strategies for what we want to do? And, we are sitting in some uncertain times economically and macro, macro around the world. And, how do we look at that differently today? So I'm going to talk to you a lot about multifamily investing today. I see a lot of investors who are sitting on a gold mine of data and they don't use it. The question is, if you have numbers and you have financials, how do you put that to better use? The question, how do we drive net operating income on properties? How do we increase value in properties for the long term? And one thing I always try to encourage people to remember is that this isn't a short-term game, but it is a longer-term game. Today, I'm going to talk to you about who I am, who my group is that I am with, are some market conditions. I'm going to talk about the data that we use. I'm going to talk a little bit about AI and where the smart money is going today. And then along with some defensive strategies, how we look at some of the data that we take and build defensive strategies on our acquisitions. And then if we have a couple minutes at the end, I'll share an investment opportunity. Daniel, how much time do I have?
You've got a full hour here, so all the way to the
great.
top of the hour.
Great. I'm not going to rush then. So who we are, we're a real estate private equity investment group, and we combine an entrepreneurial approach with an institutional infrastructure. My name is Mike Morawski. I have over 30 years of real estate experience. My journey started as in the general contracting business as a developer in the Chicago market. I built residential room additions for a number of years. Can you see my screen, Daniel?
Absolutely. Yeah.
Oh, okay.
Looks great.
All of a sudden I was like, wow, did I share my screen? So I apologize. I am an author, a speaker, and a personal coach. I work with investors looking to either get in the real estate space or to scale their business. At the bottom there, that's a copy of my third book. This was an Amazon bestseller, and I am very proud of that, actually, because after 3 attempts, I finally got a bestseller. So I'm an industry thought leader. And as I said, I love to coach and mentor people and help them grow, whether they're active investors or passive investors. My attorney always says before I ever give any presentation that I need to give a disclaimer. I'm not an attorney and I'm not an accountant. Anything I share with you is basically for educational purposes. Don't take it as gospel. If you ever want to make an investment or do anything with us or our group, we ask you to do your own due diligence and make sure that you're comfortable with any investment or any other opportunity. Where are we at in the world, right? I think that's a big question of a lot of investors today. Currently in the market, what is going on? We've got rising inflation, rising interest rates, volatility in the stock market, and creating a lot of investor uncertainty. And I think the big question a lot of people ask is this the right time to invest? And I'm going to try and defend some of that data and prove to you that it is a good time to invest and maybe one of the best times that any of us will see in our lifetime. Traditional investments in the stock market, bond market are just not enough anymore today. You've got the S&P where valuations are extremely stretched, where, I think that we're seeing a lot of assets in traditional investing that are overpriced. You look at where Bitcoin is at today, what is Bitcoin really? And, I'm certainly not an expert in cryptocurrency, but it is one of those places where you have to say, what am I trading here? Institutional money is fleeing the US markets, looking more globally for other opportunities. And there's a big shift in the market for defensive assets, using things like gold and precious metals, more fixed income products, along with alternative investment products that are helping balance portfolios. There's the problem with traditional assets, and I think there's a number of them, but, we have $34 million in US debt. The interest payments alone reduce the federal flexibility to be able to invest or to take pressure off the stock market itself. Yields on bonds are up, value still can drop, and they rarely beat inflation. I've had a lot of passive investors say, well, I'm invested in treasuries today, and there's security in treasuries. But, a treasury today is maybe only paying 4%, 4.5%. And although it is guaranteed and although it is fixed, and, are you really beating inflation? Are you really making any money? Because if you're making 4% in the treasury market, but inflation's at 4%, you're really breaking even, if not losing money. So there's other alternative investments out there like annuities. Annuities carry high fees, longer lockup periods, and you don't get the tax benefits from annuities that you would typically get. But BlackRock made a statement this year to the global investor markets, and they said that real estate, private equity, and infrastructure are on the rise. Retail investors often lack access or guidance, leading to fear or missed opportunities. So what I want to try and do today is give you a little bit of opportunity that could help balance or increase your portfolio. I believe that there's a lot of investors that they allow emotions to drive their decisions. The fear of loss, what we hear in the headlines or what's on the news. And I think as soon as the news and the media starts to shift their story, then the world starts to shift. But so much is driven by what the media tells us and the fear that's attached to that. It's hard for people to make rational decisions or even data-driven decisions. Retirement and savings are an emotional risk today. I heard a statistic the other day that I can't remember what the percentage was. It was very high. It was in the high 60% range, that 68% of the population have $1,000 in a savings account. So what are people doing for themselves today to increase their investment, their portfolio, to build for long-term wealth? Well, we want to look at things that matter. And as the chief investment officer for Resilience Equity, a multifamily investment firm, we look at a number of things. We can all start with a great plan, but a lot of times we have to adjust that plan along the way. I have been in the business long enough to know that I have to be in a great market in order to even have an opportunity or a multifamily opportunity make sense to what's going on. I always use this example. I lived in Chicago forever and never invested in Chicago or the Chicago market. I always tended to invest in markets outside of Chicago because of pricing, because of the landlord laws and other things like that. But we strongly look at things today like population growth, job growth, household income, employer diversification in a market. Previously, over the years, I've been invested in markets that might have one or two employers in them. And prior to 2008, I was heavily invested in the Ohio Valley. And the Ohio Valley, at the time had two major employers. They had distribution, and they had, in the distribution sector there, they had UPS and DHL. And then they had manufacturers that manufactured small parts for automobiles. And if we all remember what happened in 2008 when the world went sideways, those were two industries that got hit the hardest. So as a result of that, occupancies in properties dropped, and rents dropped, and concessions increased. And this all caused challenges in the market. Today, I really want to be in markets where I have higher employer diversification. We're heavily vested in the Tulsa, Oklahoma market today, where we have multiple employers. So if a sector of the world goes sideways, we still have other businesses that are still operational. Now, what I've done is I've gone and I've asked those same questions of AI, and I use ChatGPT a lot for research and market research. And I'll talk about a couple of other assets out there that we use and are starting to cover some, pick up some steam to use in market research and operations. But I asked those questions about population growth, job growth. And, my first pass is always going to Google or some of the other paid platforms that we use, like CoStar or Real Analytics. But when I go to AI and I use ChatGPT, or I use some of these other platforms like LeaseHawk or Me2Lease, I get different answers, and I get answers that give me the same strength that I might be getting on a particular market from just, my Google research or my CoStar research, but the answers are stronger. There's AI chatbots out there today that help us with occupancy on properties. So they can handle leasing inquiries, schedule tours, and answer a lot of frequently asked questions. I don't know if you've had the opportunity, if you want to call it an opportunity to call in somewhere, get on a phone call with a chat bot, but it definitely is like having a conversation with another human. We use AI leasing tools that are powered through companies that I mentioned a minute ago, like LeaseHawk or Me2Lease, and they can follow up with prospects, and they follow up automatically, either with text or email messages, along with phone conversations. We use products today for predictive analytics, which will help us get a higher identify more prospects, save us leasing time, save our on-site staff time so that they can be doing other at-hand tasks. And then we can also use systems that will help us with predictive pricing. So what I want to know is, what are all my competition in the market renting properties at? And how do I increase my occupancy in a property by using systems that tell me what everybody else is renting at and how I can be competitive in there? But there's tools out there that are put out by RealPage, Real Analytics. There are a couple of other companies that are really spearheading the use of AI. We can also use tools for revenue management and use real time.
Hey, Mike.
Yes.
Sorry, I'm trying to jump in here before we get too far down. You mentioned LeaseHawk and Me2Lease. I'm having a little trouble finding that second one.
It's called Me2Lease, MEETELISE,
Okay.
all one word.
All right.
Does that help?
Yes. Thank you.
Yep.
And then I wanted to ask you what the name of your tool was that helps you with raising occupancy.
It's a tool. It's powered by RealPage, and
Okay.
it's a system that they have been working on.
Okay. Great. I'm going to try and put links to these in the chat for everyone.
Okay. And, one of the groups that I work with spend a lot of money on an annual basis on data products to help drive their data. I work with a group that is, they've done about 100,000 units over the last 15 years and close to $2 billion in acquisitions and dispositions, and are very involved with AI and the growth of some of these tools.
Okay.
But we can also look at expenses and budgeting. You know, you can sit down and do a standard budget today, but how do you really pay attention to that budget? You know, there's algorithms out there today that can detect anomalies in utilities, vendor billing, repair costs, and you'll get alerts. You'll actually get alerts that will tell you you're out of alignment, or that, you know, some of the greatest tools out there today are on utility management. And you have the ability to put sensors in on water lines and sinks, in toilets, in outside spigots, at water meters, and be able to determine if instantaneously, if a leak has occurred, if you're using excess water. You don't have to wait for the water bill to come out to tell this now. You'd be able to determine who's going in and out of buildings, based on AI tools, how your maintenance team is performing on properties. So there's a lot of things happening in the industry that are helping us be more efficient and more effective at what we do. I asked ChatGPT a simple question. I said, how do I increase my NOI? Because you may or may not know that NOI, net operating income, is a driving force, not only in multifamily real estate, but in any of the commercial real estate products. And how do we increase it? Because, you know, I always look at my NOI and I say, so for every dollar of NOI that I add to my P&L, I grow at a 7 cap. I grow the value of that property about $240. So how many dollars do I want to add to my NOI, and how do I do that? What ChatGPT told me, though, about that is to always measure the cost versus benefit. So how much am I spending for what I'm getting back? And that's a great business principle to remember anyhow. But we track every incentive, we track every amenity, we track every utility bill. This is what helps move the needle and create more revenue boosting strategies. And then ChatGPT got a little specific with me. They started to talk about increasing rents strategically, using AI and AI optimized tools to dramatically adjust pricing, and to be able to real time adjust that pricing, raise rents and do lease renewals gradually as well as instantaneously. A couple other suggestions that I was given were implement RUBS programs. RUBS is a ratio utility billing system, which helps me bill back the tenants for the usage. You know, the old RUBS system used to be that they would take all of your utility bills on a particular property. They would calculate them based on how many people lived in a unit, and they'd split those bills up on a weighted basis. Well, today it can be done automatically using some integration and some different tools. We can look at things like amenities, amenities being reserved parking, storage, pet fees, Wi-Fi. There's a big craze going on today in new developments where they're making smart technology for locks, for all of the Wi-Fi on properties, not just in your particular unit, but anywhere on that property. There is smart technology around the cost savings plans, how to use heat, how to use your air conditioning more effectively, and saving money not only for the tenants that are individually billed, but for operators who are being billed on common areas of properties as well. Different charges for premium units. Gave me a bunch of suggestions on how I can upcharge for different things in a premium unit, meaning maybe I have smart technology in a unit and I can charge more for that. Maybe I have a furnished unit, I can charge more for that. maybe upgrades in lighting or upgrades in appliances. So ChatGPT was very thorough on how we can increase market. There's a lot about streamlining property management and watching all of these expenses, all of your budgeting, all of your repairs and maintenance issues using automation today and being able to stay ahead of it, keeping up with preventive maintenance, not overreacting when certain repairs come up. It saves long-term capital expense dollars and avoids costly emergency repairs. And I love the fact that we can save on costly emergency repair or avoid long-term repairs. You know, I think a lot of times you'll have a tenant that doesn't want to report a small leak. And I had an incident a few years ago in a property that I owned where we had a tenant, they had a small leak underneath the sink and they never called about it. And it just leaked and it leaked and it leaked. And it would have been a $150 repair to go in and put a new J-trap in and change a water line to stop this leak and repair this. And the tenant never called. And they lived there for about a year and a half. And when the tenant moved out, there was so much mold under the sink and on the wall as a result of the water and the buckling in the cabinet that the whole cabinet, the sink, the wall had to be replaced. And a $150 repair turned into be a $3,800 repair and just cost us more money than what it should have cost us, you know, if somebody would have reported that. So the use of technology today and some of the advances that we can see by catching that stuff early just really makes the long-term challenges so much easier. Now, we want to execute some adjustments. So, you know, when we come to budgeting, when we come to maintenance issues, we can see these things ahead of time today. We can predict when HVAC or plumbing appliances fail. We can stay ahead of that. One of the things that I really like about some of the AI products out there today are market research and underwriting products. You know, I talked a little bit about the market research early on, but there's an underwriting product out there. And Daniel, you might want to take this down. But the name of the company is Melise. Let me get the correct spelling of that.
Yeah.
It is, hang on, get back to this real quick. It's Molson, Mollison.
Molson Underwriting?
No, well, yes, that's where you would go, but it's molsonapp.intelcre.com. And what Molson is they have a product that, you know, my typical underwriting process, and underwriting is just a fancy word for saying we're analyzing products. But Molson will, I go into a Molson platform and I put in all of my rents, all of my unit mix. I put in all my expenses, just like I typically would do, you know, doing my traditional underwriting. And what Molson will do is it will give me a red light or a green light and tell me whether or not it's a good product to buy or what price I need to buy that product at or what types of things I can look at to maybe make it a good deal to buy. But what I really like about it is when it's done and I tell it to, it will create a pitch deck for me. And it will create a slide deck, a webinar, an entire presentation. And I don't have to manually do this anymore. It can all be done for me by automation. When I saw an example of this, I was just blown away because we took a 280 unit apartment complex, put all the information into it, and then came up with this pitch deck that was like, it was double the size of what I would normally produce, but it gave me market data. It gave me property data. It gave me multiple property data around that particular asset. It gave me my financials. It gave me investor returns. It gave me things to watch for, things to be aware of, and where I could create more profit. So
Hey,
there's,
Mike. Oh,
yes,
do you mind if I share my screen really quickly? I want to verify
yep,
that I found the right tool here.
go right ahead.
So here we go, just to make sure. Is this it?
I believe so.
All right, perfect.
Yep.
I'll give the screen back to you then.
Yep. I believe that is the product. Yep.
Okay.
So the last thing that AI is helping us do today is be more transparent with our investors.
Hey, I think you'll need to re-click the share button after I did that.
Oh, sorry.
Sorry about that.
That's all right. I have too many screens going on here, Daniel.
You
How's
need
that?
AI to help you with that.
Yeah, right. Can you see that?
Yep, we see it.
So one thing I really like about AI today is it's helping me be more transparent. It helps me to automate investor reports, give me clear visual summaries and forecasts for my investors. On a monthly basis, I can be much more transparent when I send out monthly investor updates. And then it helps me prepare to be more efficient on a quarterly basis when I do my quarterly reports or quarterly meetings with my investors. So from a transparency standpoint, every month I typically send my investors a newsletter, giving them financials and an occupancy report and a maintenance report and what we've accomplished over the last 30 days. And then at the 90-day or every quarter, I'll do a investor meeting where my investors will come to Zoom and we give a full report, what's happened the last 90 days and what the next 90 days of goals are. Well, there's tools today that I can use that help me automate all that. And I can pull reports instantaneously. I don't have to search around for data. I can pull forecasts instantaneously. I don't have to do a bunch of research. And it just has helped me to be much more efficient. And, I think a lot of people are worried that AI is going to, take a lot of jobs away. And I don't believe that in my world, because I think you still need somebody to program it, to do the work, to push the buttons and pull the reports. But it just is helping me be much more efficient today and give me better reporting tools on all aspects of what we do.
What do you tend to use for getting your forecasting data? That's always, quality in forecasting data can vary a fair amount depending on what the source is. And I was wondering if you could touch on that. Who do you tend to use? And I assume you like them.
Yeah. So what's really interesting is most of the, well, I shouldn't say most, the bigger software platforms today, like AppFolio, that we
Hmm.
use for property management software is really starting to integrate AI products into their systems. AppFolio, Yardi, and this is where the data comes from, right? So the data comes from what's happened in that property. And now these AI products are just formulating that data, and we're able to then share that data with our investors much more efficiently than we have in the past. But a lot of it is being used by the software providers, and it becomes part of your software package as an operator today. So where's the smart money going? I kind of painted a picture of the stock markets and traditional investing, how we're using AI, where we're really headed as a world, but where's the smart money going? There's a big institutional shift from traditional investing into alternative investments. Those internal alternative investments look like real estate. They look like gas and oil. And those are where a lot of we're seeing sovereign wealth money and pension funds and endowments heading. And where, when you invest in an annuity or you put money into a life insurance company, that life insurance company or insurance company needs to go make money with your money. Where, in order to pay dividends or returns back to you, well, where are they investing? They're investing in real estate. They're investing in high yield, high return assets. The other place smart money's going is they're going into REITs. Real estate stands out. According to these reports that we're looking at on the slide, real estate tends to stand out and has for years traditionally. JP Morgan forecasted that 10% of the US value of investment dollars is going to go into value add real estate. And that's what I like as an investor. I like value add. I like older product that we can go in and reinvent and create cash flow and create a better back end wealth. And there's such a shift going on right now in the world. I always say that there's no geniuses in this business. There's only market cycles. And if you can determine where you're at in the market cycle, you can determine how to make money. And we see these market cycles go up for 8 to 10 years and come down for 8 to 10 years. And I firmly believe, after being in the industry for 30 years, I firmly believe today that we are at the bottom of this cycle. And there's been a couple of times over the years that I have said, boy, I wish if I could just catch this cycle at the right time. And I believe today that we are just in front of where the cycle is going to change. And it could happen in 3 weeks. It could happen in 3 months. It could happen another 12 months. But we are in a changing position right now. And I believe investors that can invest today and start to ride this cycle up will have the wind at their back. And we're going to see one of the largest redistributions of wealth in this country as a result of real estate that we've seen in our lifetime. Now, some of the things we look at from a defensive standpoint, right? Because still, even being optimistic at where the market's going and what's happening, we still have to be defensive about that. So some of the things that I look at is fixed rate debt. A lot of problem assets today, challenged assets today, because they didn't have fixed rate debt. They bought into loans, they bought down interest rates, they did floating rate debt. And now today they can't stabilize those properties because interest rates have gotten out of hand and they've gotten too high. I bought 400 units last year in Tulsa, Oklahoma. All of those assets we bought, we assumed existing fixed rate debt on those properties, all under 4%. By doing that, that kept me in a very positive yield position. It helped me to have strong cash reserves along with some conservative underwriting. And I'm very conservative in my underwriting, sometimes to a fault, because we see a lot of deals that should make sense, but they don't. And some of that is because we're very conservative in rent growth, our loan to value, our debt loan to value, our capital improvements that need to be done. We over project. And the reason for that is I'd rather go into an offering under promising and being able to over deliver. And then again, a number of years of experience. My partner and I, between us, have over 50 years of real estate and multifamily experience. We bring good operations, good asset management to the table, not only from the acquisition side, but from that operations side. And why our real estate assets make sense today. So whether you're an active investor, somebody who likes to get their hands dirty, somebody who wants to, I always say, take care of the tenants' trash and toilets, or whether you're a passive investor, somebody who wants someone else to do that, this is a great time. But for the passive investor who wants to invest in a real estate syndication, what does that offer you? It offers you no management headaches. It offers you shares in large income producing property. There's a high demand today for housing. We still have this housing shortage that would take us over 10 years to catch up on if we were able to catch up. But the problem is the shortage grows every year and there's not enough assets that come online to pick up that shortage. And we are talking specifically around affordable housing. And this is where the value add strategy comes in, where we can buy an asset, go in and reinvent it, make it be a better class product, and create a higher yield of return along with that product. So we look at, I want you to, as an investor, to look at smart diversification. Everybody's heard for years, diversify, put some money in stocks, put some money in bonds. But I believe it's beyond that. Even in the real estate market, diversify across markets and across asset classes. Have some money in multifamily, put some money in industrial or warehouse space, be in Texas, be in Florida, be in states that are landlord friendly states. So diversify across markets and across assets. You want to have a blend of appreciation and a blend of cash flow. And a lot of times you can find assets that will bring you both, but if you can find an asset that gives you stronger cash flow and then another asset that gives you stronger back-end growth, then that's a great type of diversification for you. We have a fund right now where it's a debt fund and we're paying 12% on that. And it's an annual 12% return, but we also have assets that are brick and mortar backed assets that give you long-term wealth, where you're going to earn 17, 18, 20% per year over 4 to 5 year periods, and then be able to take that money and reinvest it. And then, of course, there's some long-term tax advantages. Everybody may have heard of the big, beautiful bill that got passed. That's a great incentive for real estate investors today because of the bonus depreciation and a couple of the other like opportunity zones that got reinitiated in that bill. Now, I don't do anything in opportunity zones, but that's another place to diversify. We do not only do multifamily, but we do some light industrial products. And we have a light industrial product that offers well over 100% depreciation back to the investors year one, and then and continual depreciation for years to come. So, if you're a high income earner, how do you write off some of that income for yourself on an annual basis? And you do that through the tax planning. I think there's some fears why people don't invest in real estate. Daniel, do I need to slow down for a minute at all, or?
I don't think so. We don't have any questions yet. So if people want to ask questions, feel free to put them in the chat. I'm tracking. I think you're fine.
Great. So some common fears I think people come up with is, what if I lose all my money? You know what? That could happen just by, any other investment that you invest in. But what I always tell people is I say, look, when you invest in an asset, you're investing in the brick and mortar. You become a member of an LLC in our structure. That LLC buys the real estate, and we buy it at where we have an equity portion of 35% in that property, which gives you the ability to have some security that your capital investment is intact. The next thing people always ask is now a bad time to invest? And I kind of addressed that a minute ago, but I really feel that we're walking into a time where this is going to be one of the greatest times in history for people to invest and be in front of the next bull run. And then again, how liquid is your money? This isn't like investing in a REIT or in a stock in the stock market where you could get your money back out or sell your stock. Real estate is inherently not liquid. Your investment funds are tied up for 5 to 7 years, depending on the asset class that you're invested in. But I always say, if you can turn your fear into confidence, some of the benefits that you're going to get from that is you're going to get quarterly or annual cash flow. That cash flow kind of provides peace of mind for you. You're going to have some control over what's happening because these are long-term growth products. You're going to see some control as a result of that. And multifamily really is a solution in what some may say is market roulette. With the S&P being as stretched as it is today, where can you go to get decent returns that have a safety valve that's intact in those? So I want to just take a couple minutes. I'm going to go through a little overview on a property that we do have on the market that we're raising capital on.
Hey, Mike, really quickly,
yeah.
we have a question from Manju.
Okay, great.
Before we jump, Manju's asking, what percentage do you trust the data that you're receiving from the AI tools? Meaning, do you validate that data in some other way?
Yes. So that's a great question. So all of that data is always validated. So it depends on what data we're talking about. But let's just talk about things like, how we evaluate a market, right? And we look at population growth, job growth, household income. I'll pull that data from multiple sources and I'll compare that data across each other. I'll give you an example. I'm looking at an opportunity in San Antonio, Texas right now that's a bank-owned asset, undervalued. We could be able to pick this property up for a relatively, below market, maybe 40% below what that asset should sell at. And I called two people today that I know have two different platforms where they pull data from. And I called my brokers. So I'm getting three different sources of data that are coming to me that I can look at: population growth, job growth, household income, employment diversification, crime, schools, economic development. I can look at transitions of sales and rental data, and I can compare from multiple sources to check, double check, and triple check my sources to make sure that the data is accurate. I hope that helps answer that.
I think it does.
Okay. So I'm going to cover a quick investment summary. If you scan that QR code, it'll take you to the investor portal where you'll find a webinar we did, a slide deck, an executive summary. It'll give you the financials, the underwriting, and then any offering documents if it happens to be of interest to you. But this property is Hideaway Cove. It's a 65-unit multifamily opportunity in Tulsa, Oklahoma. If you don't know anything about the Tulsa market, I didn't either 2 years ago when we started investing in Tulsa. But what I found out is it's a very economically diverse market with a lot of growth. One of the first things that we trended was the population. And I watched population growth for 6 years grow in the Tulsa market for 6 years at about 0.5% a year. Now, that wasn't a lot of growth. That didn't get me excited. What got me excited was the consistency in it and why it was growing. Tulsa's become a technology hub sector, and we're seeing a lot of growth because of technology there. In 2024, the population in Tulsa grew by 10%. So I think I was on the right track by watching that trend, getting involved before the big jump, and then all of a sudden Tulsa's population jumped. As a result of population, jobs grew, household income is edged up, and then we have a big employment diversification. If you were on the call and you heard me talk about the Ohio Valley with two employers in that market, Tulsa has multiple. I have aerodynamics, medical, manufacturing, education, distribution, transportation, technology, retail, and entertainment. So, if any side of that market goes sideways, I still have other sectors that are picking up the slack. So I am in a really good market position in Tulsa. We own about 400 units in that market, and our goal is to have about 800 in that market. But you can see that this product built in the 1970s, asset that's a value add asset. Most of what we're doing is we're going in and doing exterior capital improvements. Those exterior capital improvements will be a parking lot, some lighting, a couple of roofs on buildings, new signage, fascia and soffit on buildings, and some curb appeal. There were 8 units that needed to be rehabbed. We own this asset already. We have already rehabbed those 8 units. Everything's has been brought up a couple of steps in what the interiors and the finishes in those units look like. You can see they all have LVP flooring. We have white and black, and in some cases stainless appliances. Those are things that the old owners put in. Great lighting packages, consistent painting colors. We have on-site management and on-site maintenance. But if you're looking at a product like this, these assets are for, or this particular asset is for accredited investors. Being an accredited investor means that you have an annual income or have a net worth of $1 million or more, excluding your personal residence. Or if you're single, you've earned $200,000 the last 2 years. If you're married, you won't earn $300,000. So as a accredited investor, this would be an opportunity you could take a look at. But this property we're purchasing for $3.9 million, which was $400,000 less than market rate. The seller was actually asking $700,000 more than we purchased the property at. We're raising $2 million of equity, and it's a 5 to 6 year hold time. But our average annual overall return on the property is 25%. Now, this is a syndication, which means that it's a 70-30 syndication. Our investors get 70% of the profits. So our projected return to our investors is 17% per year, and you will receive a 7% cash on cash or preferred cash return on an annual basis. We always like to figure what the equity multiple is. And what I do by that is I want to check and see, can I double your money? And how soon does it take me to double your money? Well, at a 2.8 rate in 5 years, I do better than double your invested dollars. And, if money doubles at a rate of at 15% a year in 4 years. And when I bring an offering to the market, I want to try and double my investors' investments within that period of time. Again, just a little bit about the executive summary. C-class asset built in the mid 60s. We're doing about $575,000 in capital improvements. We have renovated the rest of the interiors of the units. This is in the east sector of Tulsa. You might have a market, but those markets are split up in submarkets. We have fixed rate debt on this property, 10 years at 6.6% interest. I bought this asset at a 7.25 cap, which means that I'm in a positive yield position. So we leave room for the next buyer to possibly assume that mortgage if they want to assume it, if interest rates were to go up. But I believe that interest rates are going to go down, and next year we're going to see rates back in the 5s. If you were looking at this as a 5-year projection for yourself based on $100,000 investment, if you got your 7% cash on cash return on an annual basis, year one, there are no cash payments made. We continue to build our reserve account, get the property stabilized during that period of time. But year 5, there's a catch up, a double payment. So actually your cash on cash return or preferred return would equate to $35,000 over that period of time. The next thing that happens upon sale is you get a return of your principal investment. Let's call that $100,000. And then the projected equity from your portion is $73,000, which gives you a cumulative return over that 5-year period of $208,000. And then there's the tax benefits. And one thing I will tell you is I have not updated this slide since the tax bill got passed here last week. But if you're an investor and you're a qualified investor, you invest in this product, you could receive up to 100% of your invested dollars as a write-off against your passive income or passive losses. So that always, and as I said early, I'm not an accountant. I just deliver the information. At the end of the year, you'd get a K1. You'd take that to your accountant for tax reporting purposes and see if you qualify for that disbursement. And I know we're bouncing up against time here. So anybody have any questions?
Yeah, we've got 3 minutes left, and thank you very much. Do you go by Mike or Michael? Mike?
Mike is good.
Mike,
I
okay.
usually go by Michael when my mom's mad at me and yelling at me. So
Oh, okay. So Manju has a follow-up question to his AI question that he asked earlier. He's asking, how much do you spend on AI tools per year?
yeah, so we're currently spending about $10,000 a quarter right now on AI tools. I do have, as I mentioned, I'm involved with a couple of other groups, and I have one group that I work with. They're spending $250,000 a year on
Oh my
paid
goodness.
data and AI tools. So there's a vast array of them out there. The Molson product I told you about, I believe there's a startup cost on that, and then there's a monthly cost on that as well. It was somewhere upwards of over 100,000 a year just for that product. So there is a cost to some of them, but here's what I equate this to. So some of you may remember back when flat screen TVs first came out, and they were $10,000 for a 15-inch TV. And today you can buy a 65-inch for $200. So I believe the cost on some of those products will come down over time.
Hey, just out of curiosity, I haven't found the word Molson on the product that I display there. I found Intel CRE, but I'm still kind of curious. I'm looking at the right product here, and but anyway, it's I'll share my screen one more time because it sounds like an intriguing product. But I've kind of gone inside, and this is what it looks like on the inside with this URL.
Yep.
Okay, okay,
Yeah, that is it.
okay. Very nice. And then any questions about the deal that Mike presented? Any questions there? Of course, Mike, feel free to put your contact information up. Sharing my screen, I just unshared yours. You'll have to share your screen again to display your
Oh,
contact information.
yep. Let me pop that back up. Yeah, that QR code will take you to our website for Resilience Equity. If you did anybody want the link again to my book?
Yeah,
I can,
I'll see if I can find that book and drop it in the chat for everyone. All right. Looks like, oh, we've got one more question, I think, here, or a comment. What's the minimum investment?
yes, in Hideaway Cove, the minimum investment is 50,000. And the other thing I would say, and I think I mentioned this, I'm not sure, but we do already own that asset. We've owned it for a few months. We have it operational. It's 90% occupied today. We have good collections, very low delinquency, and we have a very good handle on maintenance. So we're just finishing our raise so we can finish our capital improvements.
Okay. And William is asking, what's the timing of the Hideaway project?
It's in play right now. We're about 55% subscribed. So if you are somebody who wants to invest in that, please do your due diligence and get involved. Call me, reach out to me. I can answer any questions for you. There's a lot of supporting data in that investor portal. But the timing would be that when it's full, it's full. It could be, 10 days, it could be, another month. So.
All right. Looks like we did. And oh, can you share the link for the Molsum tool? I will do that as well. I found it at Intel LCRE, and I'll drop that right here in the chat for all of you.
Yeah, it is 2 L's. Let me,
For all you that are used to spelling Intel with 1 L.
would you be interested, and would anybody on the call be interested to see this book that it produces?
Well, I think we're actually over our time right now, so I've got to cut it off here, unless anybody else has any last minute questions. All right. Well then, can everybody take themselves off of mute and thank Mike for coming in and speaking to us today?
Thank you, Mike.
Thank you.
Thank you.
Mike.
Thank
Very
you, Mike.
interesting.
Thank you, Mike.
You are very welcome. Thanks for having me back. I appreciate it. And look forward to seeing everybody again. If I can help anybody, don't hesitate to reach out.
Thank you. And you do coaching as well. Is that an open opportunity
Yes.
that you want to discuss with people potentially?
Yeah, so I do have a inner circle program. It's a group program, as well as I do some personal hands-on coaching. I'm very limited on my space on that side, but my group program is very robust. Whether you're an active investor or a passive investor, it will help you on your journey.
All right. Everyone have a wonderful weekend, and we'll see you back here next week at the Alternative Investing Club.
Thanks,
Bye.
Daniel. Bye-bye.
Thanks, Daniel. You too.